Iran versus Israel. Who's profiting and how to invest in global conflict. War has returned to the Middle East, but this time it's more than a regional clash. Missiles are flying between Iran and Israel, lives are being lost, cities are burning. But while the world watches in horror, some are watching stock tickers. Because behind every missile strike, there's a defense contract. Behind every drone launch, there's a company earning billions. And behind the scenes, politicians and investors are quietly profiting from this war. In today's video, we're exposing who's cashing in, which companies are making a fortune, and how people, yes, even retail investors, are getting financially involved in one of the most dangerous conflicts of our time. But this war isn't just being fought on the battlefield, it's also being waged in boardrooms, trading floors, defense contracts, and political war rooms. As missiles fly, defense stocks surge. As talks break down, military budgets go up. And while everyday people fear for their lives, investors, contractors, and lawmakers are positioning for profit. Let's start with the facts. On June 13, 2025, Israel launched a coordinated assault on Iran's nuclear infrastructure. Codenamed Operation Rising Lion, it had involved more than 60 fighter jets and 100 precision bombs dropped on key targets in Natanz, Iraq, Tabriz, and even the capital Tehran. Iran immediately retaliated with a full-scale barrage of ballistic missiles and kamikaze drones, striking Israeli military bases, infrastructure, and tragically civilian hospitals. Diplomatic channels have collapsed. Geneva peace talks stalled within 48 hours. And as of now, both countries appear locked into a long-term campaign, with significant regional and global consequences. But while sirens are blaring in Tel Aviv and Tehran, on Wall Street, another kind of alarm went off. The moment the conflict escalated, defense contractors' stocks took off like rockets of their own. Let's break down who's gaining the most. Lockheed Martin, LMT, the largest U.S. defense contractor, up nearly 7% this week alone. RTX, Raytheon, Missile Systems and Radar Tech, Essential, up 5.5%. Northrop Grumman, NOC, Stealth and Surveillance Kingpin, up over 6%. General Dynamics, L3Harris, BAE Systems, and Elbit Systems, all climbing. ETFs like iShares U.S. Aerospace and Defense, ITA, and VanEck Defense ETF saw some of their highest volume days in 18 months. Because investors understand war is money, especially for the companies that build the tools of modern warfare. And these companies aren't just benefiting short-term. With Israel likely rearming and Iran demanding new missile defense systems from Russia and China, we're looking at years of contract backlogs. What are your thoughts? Will you run towards government contracts after this video? But here's the twist no one talks about enough. It's not just investors making moves. Politicians are quietly cashing in too. Congressional stock disclosures reveal that several U.S. lawmakers, including Repiers Jared Moskowitz, DFL, and Senator John Boozman, ERAR, purchased shares in defense contractors like Lockheed and RTX just weeks before the attacks began. Even more disturbing, over 30 sitting members of Congress currently hold investments in the same companies they approve funding for. These are the same lawmakers voting on foreign aid to Israel, weapons export authorizations, and Pentagon defense budgets. And yet they hold personal stakes in the firms who benefit from those decisions. That's not just a conflict of interest, it's a conflict of morality. Don't forget to like and subscribe. Now, let's talk about what regular people, retail investors, are doing with this information. Some investors are actively buying into this war narrative. Here's how. Direct investment in defense stocks. People are buying shares in Lockheed Martin, Northrop Grumman, RTX, and General Dynamics. These companies have proven wartime demand, global contracts, and government insulation. Exchange-traded funds, ETFs. Defense-focused ETFs like ITA or DFNS offer diversified exposure to the entire sector. These are ideal for investors who want in on the growth without picking winners. War tech and surveillance companies. Don't overlook tech stocks with military contracts. Companies like Palantir, which powers battlefield data, and TTM Technologies, which builds military-grade circuit boards, are seeing renewed interest. Options trading. More advanced investors are using call options on defense stocks, betting that prices will spike as the conflict escalates or drags on. But let me be clear, this isn't a game. Investing based on war is controversial. And while the profits may be real, so is the bloodshed. Ethical considerations and risk. Let's pause for a moment. Yes, there's opportunity, but there's also risk and responsibility. Ethical dilemma. Making money while people die, that's a heavy moral weight. Investors should understand what they're participating in and consider their values. Market risk. A single ceasefire, diplomatic deal, or U.S. peace intervention could send defense stocks crashing overnight. War-driven markets are volatile and dangerous, just like the wars themselves. Political fallout. There's growing scrutiny on politicians and investors who profit from military escalation. More public exposure could lead to backlash or even new regulation. The Iran-Israel war is reshaping not just the Middle East but the global economy. Innocent lives are being lost, but behind the scenes, defense contracts are being signed, portfolios are growing, and powerful people are getting even richer. So the question is, are you watching from the sidelines? Are you paying attention? If you got value from this breakdown, subscribe for more geopolitical finance, global conflict updates, and the untold truths behind the headlines. And remember, war creates chaos, but chaos creates opportunity. The only question is, what will you do with it? If you need assistance with government contracts, visit landing.govbidder.co.